Welcome to JC Stocks and Markets Podcast for May 4th, 2024. Yes, it's May. I'm JC, been investing in the stock market for 40 plus years. My intentions with the podcast are to share my thoughts and opinions on some stock and ETF picks with an emphasis on dividend-paying securities. I want to share investment ideas so that you and I can maybe make a buck. I'm not doing this for money from anyone. The opinions shared here are my own. They are just that, opinions. I invest in many of the stocks and ETFs that are featured in these podcasts, not the one today, but I would consider it if it drops down to where it needs to be. We'll get to that. Disclaimer, do your due diligence before investing in anything. With that, let's go make some money. The stock I'm looking at today is Arbor Realty Trust. ABR is the symbol. As you can see, it's a REIT that specializes in single-family homes, multi-tenant homes, and commercial properties, all of which are a little bit iffy and maybe a little bit dangerous, but Arbor, I think, is a little above the mark on this one, and I'll try to get into some of that. I want you guys to do your own due diligence on this because this is more risky than I'm used to recommending here. With Arbor Realty, as you can see, that the PE ratio is pretty low. Even at the $13 range, you're looking at under 8, which is low for the industry. With earnings per share projected at about 175, and it'll be somewhere in that, or maybe a little lower. And more or less, it's gonna cover the forward dividend and yield, especially with the cash flows that they have. Target estimate $14.05, which is about $1 higher than it is now, but we'll talk about where I would consider it in the next few slides. Arbor Realty just reported their first quarter 24 earnings. One of the key things that I see is the interest income is actually higher than last year, but it was 2% different, lower than last year. But if you look at some of these other revenue sources, most of them are semi in line and kind of really what was expected, with the net earnings per share of 31 cents versus 37 cents. It's been a tough year for commercial and single family real estate, especially the lending and that sort of thing. So to me, it's a bit encouraging because the way I see it and the way a lot of folks are seeing it, maybe I'm not right about this, but I think that we're at a trough. You know, the demand will rise from here, and I think we're seeing the worst of this. So that's why I'm really encouraged by Arbor Realty. This slide shows some of the basic metrics for Arbor Realty. This is from Yahoo.com. Some of the encouraging things that I'm seeing is price to book is 1.0. That's good. And really, all these in the right column, profit margin, return on assets, return on equity, revenue, net income, and the earnings per share. Total cash on hand, almost $1 billion for a $2.4 billion market cap. That's pretty good. And the only thing I don't like is the debt to equity, which is a little high, and that's why I highlighted that in red. You know, again, they're leveraged, but I think the worst is over here. Unless you think it's not over, you know, I think we've seen the worst of it. The next slide is a little redundant. This is from the American Association of Individual Investors. As you can see, a lot of the statistics here are much the same. But the score as of yesterday, essentially the value score is 63, which is 63 to 80 is a value, not deep value, but value. So they still look at this as pretty highly touted and pretty well capitalized, as well as with cash on hand. To me, I like what I see here. And again, if you're looking at something that might grow with a 13% dividend, 13+% dividend, and you think they can sustain it, and you think the worst is over, this might be a consideration for you. Look at it hard, though. Before you invest, this one, look at it hard. Last chart I wanted to show you is from Yahoo Finance. Essentially, it's the chart of where we're looking at now. We're looking at somewhere, I don't know, close to $13 a share. I think it's a bit overbought right now. I think it could come back down to 12. And I think if you're looking at buying this, I wouldn't put a lot of funds. I would make it a small position in your portfolio. That's probably what I would do because it's a bit risky. But I would look at it at about $12 a share, and I think that would be a reasonable price. And you're closing in on 14% interest or a dividend at that point. That's a pretty good return for a company that's reasonably sized, well capitalized, and has plenty of cash. This might be a time to piece into it. But it's something that I think you need to take a look at if you're looking at investing in this thing. To me, it's risky, but take a do your own due diligence, especially with the financials on this thing. Arbor Realty Trust, ABR, or on is your ticker. Thank you for listening. I appreciate it. I'm trying to just give people ideas. I hope I'm able to do that, convey it in a reasonable manner in a short period of time. Do your own due diligence. Thank you for listening. The intro-outro song is a song I used to do that I played in a band, Just One Goat. I wrote the song. It has a lot of deep meaning for me. I hope you enjoy it. Again, happy investing, and thank you for listening. Bye now.
Everything is magical, even when she's not around. No, it's not that radical, I just know what I have found. Well, she's always there for me. It's simple, can't you see? She's the one. Oh, she's the one. She's making my life so much stronger. God, let me stay just a little bit longer. She's the one. Yeah, she's the one. Yeah. Wasted all this time.